my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Market Analyst at ADM Investor Service International Limited. And here is your weekly technical analysis of Paris milling wheat, London UK feed wheat, and European processing potatoes. I'll start with Paris milling wheat. A double top pattern, which we have seen in Chicago and Kansas City wheat, though not in Minneapolis wheat, is evident here, but not as far along as in the others. Indeed, we have the supports far higher up here than in the others, as we can see the market has been, or is currently, battling the following. The medium moving average currently at 216 even. The recent 50% Fibonacci line at 214 even. Short medium moving average at 210 and a quarter, and soon, perhaps, the rising long moving average at 207 and 3/4, and the 50% Fibonacci line of the August 2020 to January 2021 move at 206 and a quarter. This slowdown in the decline does give the opportunity to point out potential targets for the recent April to May double top. Therefore, an initial target X would be in the 201 and 3/4 area, whilst a full target X1 would be in the 195 even area. As you can see, there's a lot to go still on the downside for this pattern. A key point to look out for would be a move under the 50% Fibonacci line at 206 and a quarter, as there isn't much underneath until target X. As for the top side, the flatlining medium moving average would be key there, I would suspect, in the immediate future. London UK feed wheat. Not quite the double top we've seen in other wheat contracts over April and May. It's more like a market sliding along the underside of the middle time, currently at 216.05 of the bullish Andrews Pitchfork, the December 2020 to March 2021 move. In the process, last week we did have an unusual horn top, with one leg, the first leg, being a bearish gravestone doji. Anyway, the market has since fallen, it's fallen since the horn top, and is currently wrestling with three key supports. Those are the flatlining medium moving average, currently at 203.40, the slightly dipping short medium moving average, currently 201.90, and most recently the recent 50% Fibonacci line at 201.60. However, over all of this, there are two things that you must still keep in mind. The first one I have already mentioned. It's the bullish Andrews Pitchfork for December 2020 to March 2021 move. This is still valid, and until the lower time, which is currently at 196.55, is properly taken out, it will still be there, directing the market. Second is something I have spoken about a few weeks ago, and I quote, "You see, we seem," and I use that phrase carefully, "we seem to possibly be forming a bow tie formation of the moving averages. Specifically the short moving average, which is currently at 206.30, the short medium moving average, and the medium moving average. It is not wholly certain as yet, but it looks that way. Additionally, they are entering with the bow tie in the wrong order, but I will allow some leeway for that. This will be something I'll be watching, and will give a better report upon next time." Well, the bow tie crossover happened on the 29th of April. That means that between 15 to 20 sessions after, we may see a move, despite the way they came in the wrong order. Additionally, at the time of crossover and soon after, the bow tie looked like a bullish bow tie, but today, not so much. Hence, I'll just say that we might have the start of a move between 15 to 20 sessions after crossover, rather than try and be directional. So when will this period occur? Well, it's between today, Friday, 21st of May, and the end of the month. So watch out and be careful. European processing potatoes. And so it strikes again. Changeover really messes up continuation charts such as mine. One moment you're looking for a move back up over the revitalized February to April falling wedge pattern, and then a sudden leap up towards the high of the year, and then stability, nothing changing. Anyway, what can I say here? Well, there actually are a few things. First off, the recently drawn bullish Andrews pitchfork for the November 2020 to March 2021 action is still valid. The market is currently crossing over the middle time, which is currently at 13.9. Additionally, the high of this year is at 13.9 and is also influencing this market, as prices have halted just underneath it. Next, prices are in between two absolute Fibonacci levels. The overhead 50% Fibonacci line at 17.5 and the 38.2% absolute Fibonacci line just below the market at 13.4. Finally, perhaps the most interesting thing of all, this gap high has caused a bow tie formation to happen with the moving averages. Notably, the short moving average currently at 13.2, short medium moving average currently 10.6, and the medium moving average currently 11 even. The only issue is that they are in the wrong order of entry, even for a bullish bow tie formation, which they closely resemble. Nevertheless, it is still a bow tie formation of some sort, and I'll give it some leeway. So what happens next? Well, in theory, in about 15 to 20 sessions after crossover, the market should start to move in the direction of the bow tie. That would be between the 24th of May and the 1st of June. So watch out. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.